When it comes to smart money management, many say investing is the pinnacle. It's an arena where your money can flourish without constant oversight. Yet, the world of investing can seem like a daunting maze with its constant flux and intricate strategies. That was my sentiment too, until I stumbled upon the magic of ETFs, specifically 3 golden ones. Welcome to Dividend and Conquer, where we unravel the complexities of investments, making them accessible to all. Most of us have this aspiration, to watch our money multiply without lifting a finger. It's the allure of passive income, the idea that your money can work tirelessly, even as you drift into a peaceful slumber. I've always been intrigued by successful enterprises, leading me on a relentless quest for knowledge. The more I dove in, the clearer it became. It's not just about investing, it's about the lifestyle, freedom, and opportunities investments can provide. Enter the world of ETFs, or exchange-traded funds. Think of them as a mixed bag of stocks, aiming to lessen the risk by offering a diverse portfolio. It's a method even your grandmother might employ, and chances are she's outperforming some of the big players with her picks. So here are the 3 ETFs to consider. But first, a quick guideline. When selecting from the choices I present, pick just one from each category. Diversifying within a category might dilute your returns. Secondly, define your investment goal. Is it long-term growth or consistent dividends? Lastly, consistency is key. Regular fixed investments over time can lead to remarkable results. Imagine investing just $250 monthly for 40 years. The cumulative potential is astounding, especially when dividends are factored in. As we navigate through life's ever-winding financial path, the dream for many remains consistent, achieving monetary freedom and security. This doesn't necessarily mean amassing vast fortunes, but rather having the means to sustain our desired lifestyle. Whether it's traveling the world, ensuring a comfortable retirement, or leaving a legacy for our children and grandchildren. At the heart of this journey lies a fundamental truth. The decisions we make today, big or small, will pave the way for our financial future. For many, the world of investment can seem overwhelming. It's a universe filled with endless options, jargon, and let's face it, potential pitfalls. Stocks, bonds, mutual funds, real estate, the choices are numerous, each with its own set of advantages and challenges. So, where does one begin? Begin by understanding that investing isn't about getting rich quick. Instead, it's about adopting a systematic, disciplined approach. It's about laying down bricks, one at a time, building a fortress of financial security. Each investment choice you make is a brick in that fortress. Let's discuss one that's been gaining substantial traction in the modern investment landscape: ETFs, or exchange-traded funds. Picture this. Instead of choosing a single ingredient or stock, you opt for a pre-mixed basket containing a variety of top-quality ingredients. This basket offers diversity, and as any savvy investor will tell you, diversification is a cornerstone of building a resilient portfolio. You might wonder, why not just opt for mutual funds? A fair question. While mutual funds have been the traditional choice for diversification, ETFs bring something extra to the table. Their structure provides the flexibility of stocks, since they're traded on stock exchanges, and the diversification benefits of mutual funds. Moreover, the transparency ETFs offer, wherein they disclose their holdings daily, is something many investors appreciate. It's like having a clear window into where your money is going. But with the myriad of ETFs available today, each tracking different sectors, industries, and even commodities, making a selection might seem daunting. Do you opt for an ETF tracking the tech sector, or perhaps one that focuses on green energy? Do you choose a US-centric fund or look globally? This is where introspection plays a crucial role. The world of ETFs is not one-size-fits-all. It's tailored to fit the myriad of investor profiles and goals. But before diving deep, ask yourself, what's my endgame? Is it amassing wealth for retirement or securing a passive income for the coming decade? Drop a comment below, as your answers will help guide your ETF choices. And if you found value in this content so far, give us thumbs up and subscribe to our channel for more insights. Starting with our foundational category, market ETFs. These funds mirror the market's pulse. Consider VTI, an all-encompassing market fund. With a portfolio spanning over 4,000 companies and a nominal expense ratio, its past performance boasts an 11% growth rate. On the other hand, VUO focuses on the top 500 US companies, with similar costs and a slightly better growth rate. Both are strikingly comparable, making either a solid choice. Moving forward, when dissecting the differences between VTI and VOO, one must weigh in on personal preferences and strategies. VTI offers broader exposure, encapsulating almost the entirety of the U.S. market, thereby giving investors a wide safety net. This spread minimizes risks associated with individual sectors' fluctuations. Conversely, VOO, while still broad in its coverage, provides a slightly more concentrated bet on the larger, potentially more stable giants of the U.S. economy. This focus might resonate with those who believe in the sustained dominance of top-tier corporations. So, when choosing, it's crucial to reflect on one's risk appetite, faith in industry titans, and the desired scope of market representation in the portfolio. Next, the thrill seekers might lean towards growth ETFs. These are volatile but come with high return potential. QQQ, for instance, holds over 100 top-tier tech firms with a slightly high expense but impressive 16% annual growth. Alternatively, VUG offers a broader spectrum of 250 companies at a lower cost and has shown a commendable 12.9% growth. Both have demonstrated stellar performance, though they've faced recent market pressures. In evaluating between QQQ and VUG, it's essential to consider your tolerance for market swings and your investment horizon. While QQQ's tech-centric approach capitalizes on the digital age's rapid advancements, it may also be more susceptible to industry-specific downturns. VUG's diversified roster, on the other hand, spreads risk across various sectors, potentially offering a smoother journey. For those with a penchant for tech and a longer-term perspective, QQQ could be appealing. However, investors seeking a balanced growth strategy might find solace in VUG's wider net. As with all investments, thorough research and understanding of one's financial objectives and risk capacity are paramount before committing. Lastly, for those eyeing passive income, high dividend yield ETFs. These funds prioritize companies with consistent, sizable dividends. VUIM stands out with nearly 450 companies, boasting a modest expense and an average 10% growth. Its dividend yield stands at a sturdy 3.39%. Meanwhile, SCHD, a personal favorite, offers a slightly better yield at 3.73% with an admirable 12% growth. Both ensure stability, but SCHD shines slightly brighter in consistency. Further analyzing VUIM and SCHD, it's evident that the allure of these ETFs lies in their ability to generate regular income while still offering a chance at capital appreciation. VUIM's expansive portfolio approach gives investors a broader exposure, potentially cushioning against downturns in specific sectors. SCHD, on the other hand, seems to have mastered the art of balancing growth with dividend consistency, making it a magnet for those seeking reliable quarterly payouts. However, an important note to remember is that past performance isn't necessarily indicative of future results. Both ETFs have their unique strengths and play distinct roles in a diversified portfolio. Investors need to weigh the trade-offs. The vastness of VUIM's holdings versus SCHD's slightly better yield and growth figures. Always keep in mind your financial goals and time horizon when making such decisions. In conclusion, the realm of ETFs is vast, offering avenues tailored to different goals. But remember, the essence of investing isn't just in the returns, but in the opportunities it can unlock. Alright, now it's your turn. Which of these ETFs resonates most with your investment goals? Or perhaps there's another ETF you swear by? Drop your thoughts in the comments below. We're eager to hear your insights and experiences. Remember, we are not financial advisors, and the content presented in this video is for informational and educational purposes only. Always consult with a licensed financial professional before making any investment decisions. Thank you so much for joining us today at Dividend and Conquer. If you found this video valuable, give us a thumbs up and don't forget to subscribe for more insights. Until next time, happy investing and take care.